Hello all, welcome to Market Vision by Investment Advisors. In this video, we will talk about how the markets performed on Friday and analyze a comprehensive outlook for the trading week beginning Monday, May 26, 2025. After a strong and decisive rebound on Friday, May 23rd, where Indian markets recovered all of the previous day's losses, we are here to analyze what drove that surge and what to anticipate as we head into the next week, especially with the contrasting global picture. Let's discuss. Friday was a fantastic day for the Indian bulls. The Nifty 50 climbed a significant 243 points, that's nearly a percent up, to close strongly at 24,853 levels. The BSE Sensex mirrored this enthusiasm, jumping 769 points or 0.95% to end the week at 81,721 levels. This robust performance effectively erased Thursday's losses and has set a positive tone domestically. The rally was overall broad-based, with almost all sectors contributing to the up move. Leading the charge was the FMCG sector, gaining a solid 1.63%. Heavyweights like VBL, ITC, which also reported their positive earnings sentiment, and Nestle all gained over 2%, showcasing renewed investor interest. The IT sector also saw a good rise of 0.95%, with stocks like Persistent, Infosys, and TCS gaining over 1% each, indicating buying in these counters. The energy and oil and gas sectors were buzzing, and they also gained 0.87%. The standout here was Reliance Power, which unbelievably gained 16%. Other notable gainers included JP Power, BHEL, Power Grid, Suzlon, BPCL, and Oil India. All were up around 2% or more. This broad participation in the power and energy space is certainly noteworthy. The auto sector also closed in the green, though with more modest gains of 0.24%. TI India, Bosch, and MRF were among the top gainers, each up over 1%. The pharma sector was the odd one out, declining 0.41%. Key stocks like Sun Pharma also impacted by Q4 earnings that missed expectations. Torrent Pharma, Gland Pharma, and Abbott India all fell by over 1%. Now here's what the picture gets interesting and warrants caution. While Indian markets shot up, the global scenario on Friday was quite different. Most world markets actually nosedived. In Asia, it was a mixed bag. Japan's Nikkei managed a 0.47% gain, and Hong Kong's Hang Seng was up by 0.24. However, Shanghai fell by 0.94%. The real concern comes from European and the US markets. European markets saw a significant sell-off. Germany's DAX was down 1.61%, France CAC plummeted 1.65%, and UK's FTSE slipped 0.24%. US markets also continued their downward trajectory at their previous day's close. On Friday, the Nasdaq fell 1%, the S&P 500 was down 0.67%, and the Dow Jones Industrial Average shed 0.61%. Reports suggest that renewed trade concerns, including potential US tariffs on EU goods and the specific companies like Apple, along with ongoing worries about the US fiscal situation and rising bond yields, all contributed to this global downturn. Looking at the commodities, we saw a mixed picture on Friday. WTI crude oil moved up slightly by 0.28%, closing at $61.37 per barrel. Precious metals, on the other hand, saw some profit booking after their recent gains. Gold was down 380 rupees, closing at 97,530 rupees per 10 grams. Silver also saw a notable drop of rupees 1000, closing at 1 lakh per kg. This could be a reaction to the strong equity rebound in India, reducing immediate safe haven demand, or simply a technical cool off on the bullion markets. Now, the big question for Monday, May 26th is, can the Indian markets sustain its upward momentum and decouple from the weak global sentiment? Or will the international headwinds prove strong on Monday? So let's analyze the charts and open interest to get a clear view. So we are in the Nifty 50 chart, and this is the daily candlestick chart. Now technically Nifty closing at 24,853 levels is a positive sign. The chart clearly suggests Nifty has decisively surpassed the crucial resistance of 24,800 odd levels. The next target could be 25,000 or maybe 25,200 odd levels, which is going to be a psychological mark or level. Now the key support is seen around 24,500 to 24,575 odd levels, from where we saw that immediate reversal coming in on today's, meaning to say Friday's trading session. Now, given that Monday, May 26th is a market holiday in the UK and the US, so trading volumes in the global markets might be thinner, which can sometimes lead to more pronounced moves or a wait and watch approach from the global investors. So Nifty to hold above 4,800 odd levels is going to be quite testimony, and it is also a kind of challenge that it should hold 24,800. If that happens, then we are bound to retest 25,000 levels as a key area or zone where we can move forward quickly from these levels. So it is just 150 odd points for Nifty to cross that particular mark. So since previously from almost 6 to 7 trading sessions before, we had approached towards 25,000 160 odd levels. From there we saw nosedive coming in, and continuously for almost 5 trading sessions we were on the short side. Now that we have uh, uh, rebound from the yesterday's low of around 24,400 odd levels, and from there we significantly moved up and close to 24,850 levels, which has decisively crossed our previous resistance zone. Now next week, if on Monday itself we outperform, then the possibilities are quite strong that we might open up for 25,600 odd levels for Nifty on next week itself. So the immediate support for us is 24,400 to 500 odd levels, and then if we slip from there on, then we will open for 24,000 odd levels in the coming week. But the possibilities of market falling in the next week is very, very low. Now let's see from the perspective of open interest. So as we had discussed yesterday that because there was a sharp downfall, we significantly saw the open interest positions on the call side got built up until 24,500, which was the zone or level where we had touched, and from there we had rebounded. Now that today on Friday the market closed above 24,850 levels, we see good unwinding at all the lower levels of 24,600, 24,500, 24,700 odd levels, and even in fact at 25,000 levels we see unwinding on the call side, and we see open interest positions got built up at 24,500 on the put side and at the lower strikes too. Now this suggests that we are headed towards 25,000 levels seamlessly, as we see a strong roughly around 60% of open interest built up on the put side, which suggests a strong support at 24,800 odd levels. If on Monday we are able to sustain and approach towards 24,900 or 25,000 levels, then we would see a sharp up move in the put writing at 25,000 levels, which would decisively be a strong support for the next week. And then at the higher levels it becomes easy for Nifty to scale, provided we will not have any strong resistance until 25,500 odd levels. So overall, from the PCR perspective, it is trading at 1, which is significantly positive, and even at the money, PCR is 0.86, which is also bullish. So overall, we are headed towards moving to 25,000 odd levels on Nifty in the next week, and 24,500 remains the crucial strong support at this particular zone. Now moving on to Sensex. So Sensex have also crossed the walls of worries, and from the low level of 80,000 odd, we quickly rebounded. So now the Sensex is also at the crucial level, standing tall at 81,700 levels odd. Now the immediate resistance for us is 82,500, which was the previous level from where we significantly underperformed for almost like 5 to 6 trading sessions on. Now that we have seen a significant buying coming in at the lower levels, and then that is when we have seen a strong bullish candle on the Friday's closing. Now this suggests that we are expected for the up move, and on Monday itself we might see Sensex crossing 82,000 odd levels. Once that happens, then we are headed towards the previous high, that is 82,500 odd levels, from where we saw that downfall coming in. That would be our first resistance, and if we significantly cross that, then we are headed towards 84,000 levels on the Sensex for the next week, and maybe in the June expiry. On the support side, the first crucial support is going to remain 80,000 odd for us, and then below, if we fall, then 79,000 would be the support, but the probabilities are very low that we might cross even below 81,000 in the coming week. Now let's see from the perspective of open interest. So open interest very clearly indicate that 81,000 levels are going to be strong support, provided we have seen a good buying interest that has come up on the put side, and at every 100 levels until 82,000 odd strikes, we have seen significant open interest positions that got built on the put writing. That suggests that there have been heavy writings from the put writers, which suggests that they would act as a strong support for the next week in the up move on Sensex. So we have 82,000 as the primary hurdle or resistance. However, this is not significant when compared to the strong buying momentum that has seen on just one single day on Friday at 81,500 strike on the put side. Similarly, at the lower levels 81,000, we saw significant buying that had emerged, which suggests that the put writers are going to hold strong 81,500 and even 82,000 levels once we start approaching on the higher side. So if we cross 82,000, then there is no stopping for Sensex. We might swiftly move towards 84,000 odd levels, because there is no significant open interest positions that are built at the higher levels on the call side. So directly we would be headed towards 84,000 swiftly, and non-stop, and it will not even give you any opportunity to exit. So we have seen in the past similar such kind of moves coming in of around 2,000 to 3,000 odd points on Sensex. The expectations are such move can also come up in the next week or maybe in the June month. So overall, we are looking a positive outlook on Sensex. to significantly move up beyond 82,000 odd levels immediately on Monday. The PCR overall stands at 1, which is again quite bullish and positive, and PCR at the money is 0.92, which is again significant. Now, from the perspective of Bank Nifty, Bank Nifty any which ways was positive the previous day as well, where we saw a hammer kind of candle that got created. Usually whenever such kind of candles get created, it suggests that there is a positive momentum that is expected. And in fact, on the Friday session we saw a significant green candle which has almost overlapped the previous red candle, significant red candle. And now for us the first resistance is going to be 55,000 800 odd levels, and then the previous resistance of 56,000, from where we started seeing the significant downfall coming in on the banking stocks. Now that we are just 700 to 600 points away from the previous 52-week high of 56,000 odd levels. So the expectation is that by the end of this monthly expiry, May 29th, Bank Nifty is expected to make a newer all-time high. So we are just 600 points away the all-time high. So the expectations remain quite positive for the next week, that we are headed to cross 55,500 levels on the initial days of the next week, and then once that substantially gets crossed, we are headed towards 56,000 odd levels. On the downside, the first crucial support remains the low of Friday, which is 54,850 odd levels. In case, because of maybe the global turmoil or some negative news coming in, if we close below 54,850 odd levels, then that should be considered as a cancellation of the up move, and then we would be ending towards the downward trajectory. So the first resistance support would be 54,850 odd levels. If we close below those levels, then we are headed towards 54,000 odd on Bank Nifty. But the probabilities of those happening seems to be very, very low. However, we cannot predict anything on the markets. We have to go up with the momentum. Now, from the perspective of open interest, so at the 55,500 odd, we see open interest positions built up on the put side, and at all the lower levels we see significant open interest positions that got built, which suggests that at all the lower levels the put writers would be writing to gain the premiums, and the overall call premiums might all turn to zero at all the lower strikes below 55,000 levels, is what is anticipated for the next monthly expiry for this 29th monthly expiry on Bank Nifty. Now at 55,000 levels, we already saw open interest on call side being unwind, and there were a lot of positions that got sold off even at the other strikes, as you could see. Even higher levels, at the higher levels, we saw unwinding of open interest positions on the call side. So this suggests that there is some fear of Bank Nifty significantly moving up and closing beyond 56,000 odd levels by crossing its all-time high, which we had seen previously at 56,000 odd levels. Now, if that happens, we are clearly headed towards another high of 57,000 odd levels in the coming week, or maybe in the June month expiry. So overall, it is quite strong from the open interest perspective, and we see 55,000 is going to remain the crucial support zone for us. At the higher levels, if we start moving up, we do not have any significant resistance. Only 56,000 would be the strong resistance. Beyond that, we might swiftly move towards 57,000 odd levels. On the PCR front, it is 0.9, which is quite bullish to strong, and also at the money PCR is 0.93, which is again showing good strength for the next week's movement. Now lastly, on the FINNIFTY. So FINNIFTY has also approached towards the immediate previous resistance of 26,500 odd, from where we saw in the last 2-3 trading sessions a kind of negativity. But with Friday's closing, it is very evident and clear that 26,000 odd zone has acted as a strong support for FINNIFTY, and from there on Friday session we saw a significant buying up move coming in. Now once we cross 26,550 odd levels on the higher side, we are headed towards crossing the previous 52-week high, which is around 26,800 odd levels. So it is just a 300-point journey for FINNIFTY to make new all-time highs. Now on the charts, it is very clearly evident that we are headed towards a clean up move on the FINNIFTY, and for us the immediate support would be the low of Friday, which is 26,200 odd levels. If we close below 26,200, then it would be considered as a cancellation on the up move, and we might trade range bound or might fall below 26,000 odd levels, but the probabilities of those happening is very low. Now let's see from the perspective of open interest. So on the open interest, though we have significantly crossed and approaching 26,500 odd levels, but still there had been some open interest positions that got added at all the higher levels beyond 26,500 on FINNIFTY. Just only at 27,000 levels we saw the unwinding happening, but small open interest positions had been built up at all the higher levels on call side. Might be looking at the open interest just on the FINNIFTY chart, it suggests a kind of range bound scenario in between 26,000 odd and 26,500 as initial zone, and in case if we cross 26,500 odd, then we might approach towards 27,000 odd levels in this expiry itself. But overall the open interest suggests that we are expected to have range bound kind of scenario on FINNIFTY. Now from the perspective of PCR, it is trading 0.9 both at the money as well as overall, which is quite bullish and positive. Now let's move on to our next segment of activities in FII and DIIs. Now FIIs on the index futures have been holding shorts to the tune of 54,000 odd open interest contracts. On stock futures, again they have been holding 17.84 lakh contracts. In fact, they have added 45,000 odd contracts in longs. On index options, there is no significant carryover of the positions from the FIIs. It is just they are short by 1,100 contracts. So they have went long with 2.44 lakh contracts, which is bullish. However, at the same time they have taken put positions on the long side, which suggests that their outlook is we might see a range bound kind of scenarios and not have a significant up move on the long side. So that is when they have not significantly added their positions on the index options. However, it contrastingly shows a picture from the proprietary traders point of view. On index futures, they do not have any significant positions. On stock futures, they are just holding 2.87 lakh contracts, which is mild bullish. On call options, they have significantly added their positions to the tune of 1.93 lakh contracts, and on put options also they added their positions to the tune of 35,000 odd contracts, and these built up of positions was actually seen only yesterday. So previous to that we had discussed that proprietary traders have not been significantly holding their positions. Now if you see the carryover on the index options from their end is 1.57 lakh contracts, which is quite significant. And entire positions got added only just yesterday, else they were short by roughly around 0.23 23,000 odd contracts. So overall, proprietary traders are quite bullish on index options. Now let's see what the retailers are acting upon. On index futures, they have been long with 59,000 odd contracts. On stock futures, they massively have been holding 17.86 lakh contracts from a very long time with the start of the month itself. On call options, they have massively gone short by 4.37 lakh contracts. And on put options, again they have taken short positions of 3.29 lakh contracts. So net retailers are short to the tune of 1.08 lakh contracts, which is against the positions of the proprietary traders. Now it is only the time will tell next week whether the positions that were taken by client had helped them, or the proprietary traders because of this up move had been the winners. So let's see how it is going to be. Now from the perspective of cash markets, the FIIs have taken long positions and bought roughly around 1800 crores of positions in the cash market. Uh, from the DII's perspective, domestic institutions also have been buyer, but with modest 300 crores buying in the cash markets. So net both FIIs as well as DIIs in the cash segment have been long. And on index options, proprietary traders have been long for next week, and clients have taken short positions. FIIs do not hold any carryover positions either on long side or short side significantly, which could be a you know decisive mode for them. Now, overall, I think this week had been volatile for the Indian markets, but however, it closed on a stronger note. Now we have to see how the next week is expected. So that's it from this edition of Market Vision from Investment Advisors. What are your expectations for Monday and the next week ahead? Do you think the Indian rally can continue the same way how it had closed on the Friday's level? Share your views in the comment section below. If you found this analysis insightful, please hit the like button, share this video with your network, and most importantly, subscribe to the Investment Advisors channel for your regular market updates and also in-depth financial insights. Don't forget to click the bell icon to stay notified. Thank you for joining us. Have a great weekend and trade wisely on Monday.